This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions. Hello, everybody. This is Dan Max at eXp Realty, aka the trading agent. This is a back to basics series that I'm going to be doing on I would call this, I struggle with the name, but it's familiarize yourself with the late 90s, early 2000s. I mean, that's the gist of it, and maybe the headline is bull market, commodities, bear market, tech stocks. So let's just get into it. Hold on, I'm writing down the title because I'm thinking here, I'm like, that's not a bad name. Bull market, commodity, bear, tech. Because that's what I'm about to show you. We're going to go back into the time machine and we're going to look at when this guy started trading. Oh, these were the days. The top in the markets in the late 90s. If you can see those moves, I mean, those were just powerful. Market went from 40 to 160, up 400%. Just like the stock market. No, now 60 to 460. Jesus Christ, that's a fucking run. Yeah, printing dollars, that's what the markets do. What I want to show you guys is the Qs. And tech topped in the 2000s, and it might look like hot shit now, but I'm just going to let you guys know, a little secret here is this isn't the first time tech was hot shit. There was a little thing called the dot-com bubble, and every company that made anything related to tech went nuts. It IPO'd the QQQ in 1999. It peaked at 120, and then it literally died back down to the 20 range. You do the math there. That is a monster slam. Well, what does that really have to do with anything, Dan, you're asking? Well, what came out of this bull market to bear market was a monster bull markets and commodities. Anyone who's following me knows that I have a long-term bullish thesis on the commodity market. Maybe none of you remember what the bull market and commodities look like, but guess what? I do. And if you look at the actual S&P 500 compared to then to now, I think they was saying the holding, like the percentage of holdings of commodity-based companies that are in the S&P 500 has never been lower in the history of the S&P 500. So, is that necessarily the best reference? No, let's just say it's a low percentage. I would call it underweight, and the market's overweight tech. Well, let's look at that. 2002, it took, 16 years, 2017, just to get back to the even. I don't want to trade that. I want to get it on high and buy low. But even then, there was better trades, and this is where we're going to get into it. Our good friend gold. You can't see, but it was down here in that bull market of commodities. It literally went from 40 to $1.80. Not bad. Let's look at U.S. Steel, a company that's been around. That thing went absolutely dog shit at the bottom of 2003 when commodities were bottoming, and so was like tech was just getting smashed and it was kind of capitulating. What came out with the bull market? 10 to 200. That's a commodity company. I remind you, let's look at the Qs from 2003 to 2009. A whole bunch of nothing, 20 to freaking 60 versus some of these commodity companies, say like US Steel. They went ape shit. I mean, I could literally pull up anything. Vale, anyone that was around then. Look at these numbers. $2 to 44. Not bad. Was the XOP even around then? I don't even think it was. Still, it went pretty bonkers. 133 hundo. What's another one? Jeez, I didn't really prepare beyond just it should be that obvious. Here was another commodity company. $2 ran up to 50. Where are some of these on here? Oh, Chevron. They definitely were in a bull market then. They went from the bottom in 2003 at $30 a share to a nice run up to 105. You're getting the gist here. It's pretty obvious what went on in Unfortunately, this isn't the trading desk that I use all the time for my computer, but you can still see what I'm saying. Another commodity name, Freeport McMoran. Bottomed in 2003 with tech at $5. Topped at 60. Remember, Qs in that exact period from 2002 to 2009 were up 200%. I hope you see that these commodity companies that I'm pointing out were up hundreds, maybe thousands of percentage. I mean, I could pull up, man, some of these names were insane. Let's pull up Rig, Transocean. Holy shit, that thing has gotten smashed, but guess what? If you go back in the time machine, you see some cool shit. I mean, it went from, I remember I used to trade this thing, 18 up to $1.80. Again, these are all names that I used to trade and pay attention to. Hold on one second. I am recording. Good. Sorry about that. I just want to check. So let's bottom line it. This is the back to basics. I want you to familiar yourself with the 2000s to 2009 period. That was a bull market in commodities. What happened ultimately was money came out of tech and it found its home into the inputs. I've been talking about this the last couple of years, potentially bottoming. It's been a stagnant bottom, but you can clearly see based on gold, based on some of these names, they have come off the lows. They're not at the lows of the last couple of years. That's why I talk about U.S. Steel is one of the ones I own for the long run. If you can see this thing once had a rocket of a move. Well, it started at 4, at the bottom in COVID bottom. It's up at 24. That's not bad. Imagine if you've been buying and it starts running. I mean, again, you have to do the research. I am showing you the evidence. Don't trust me, believe me completely, but just letting you know, like, that is what I am seeing. At some point, tech is great, but you have to have the inputs to do all this great tech, and that's the same shit that happened in the late 90s. Everyone knew there was a tech boom coming, but there was not enough inputs. Here again, we're in a position where we have the same problem. We don't have the rare earth metals. We don't have the commodities. We don't have the capacity to build out all this amazing tech for the future. So instead of investing in technology and trying to pick the winner, pick the ammunition, pick the bullets. The bullets for the next tech, for the long-term tech bull market of building out, not per se bull market in the stocks, is the inputs. You need inputs to build out this infrastructure. So I'm predicting within the next 5-6 years, you're going to see a monster bull market in commodities. It's going to blow your mind. It's going to remind me of the past. And the reason why I bring that up is there's nothing new in the market. These kind of patterns repeat all the time. Now, when I say all the time, not every day, every week, but over time, patterns repeat. Keep in mind, if you're going to build out this next technology revolution, you need the inputs. We are undersupplied, underinvested, and just did not have the capacity to build this out. So you're going to need inflation to pull up the price of commodities so that people go after it more. More people invest. Well, guess what? Once more people invest and see returns in commodities, where do you think they're going to go? Are they going to hold on to the output, or are they going to buy the inputs? Which one? I don't want to pick who wins the electrical car war. I don't want to pick who's the next source of energy war. I want to pick the inputs to these battles. I don't want to pick the companies that choose that, for example, were the Qualcomms, the Ciscos, the Lucents, Nortel, all these great companies at the time that were going to do big things. Well, so much competition. It was incredible. They built out so much stuff, but you needed inputs for everything. And, maybe tech is different than then, but it's still kind of process. If you're going to build out and deliver and create an infrastructure that can support all of this future, you got to build it out. So again, do you want to pick the winners by outputs and see who actually wins? Or do you just want to pick the inputs knowing that everybody needs them? It's literally that. Everybody needs inputs. You need bullets for a war. And the war that is coming in tech could be price compression at time. If Rivian has an electric, Ford has one, GM, Audi, BMW, Tesla, at some point they have to cut prices to compete against each other, and they will do it against each other. They will all build great electrical vehicles. Who wins that war? I don't know. But lithium wins that war. Copper wins that war. Silver wins that war. Whatever you want to say into the motherboard and the battery, those are what win the wars. Because every single one of those cars needs that. The price, the brand, that can change. Well, hope that makes sense. It's not an easy topic. A lot of people get offended when you say at some point you got to sell your tech and move it into commodities because that's all they've ever seen. They've never seen a bear market in tech. They've never seen a bull market in commodities. They literally, trade based on what some jack off who's been trading 2 years tells them. And guess what? Things change. If you don't change with them, you fucked. All right. Dan Max, eXp Realty, aka the trading agent. Just give me a heads up. I don't know when all this flips. I don't know when this changes, but you should be buying dips in commodities and selling rips in tech. That is the pair trade for me for the long term. Am I short tech right now? No, but I am long commodities. Will I short tech at some point? You bet your ass. I'll talk to you soon, or there'll be another video in the next 20 minutes. Just kidding. Cheers. Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.